You're watching Deal Flow, the show that looks at deal making. We ask about the numbers, the structures and the drama behind the scenes. I'm Erica van der Merwe. This week we look at some of the stories highlighted in this year's Cell-C Dealmakers Annual Gala Awards. We're talking to the Dealmaker of the Year as well as the Deal of the Year. First up, Tamisho has the deals of the week.
Thanks, Erica. Now, in a landmark deal that places the world's social network closer to the heart of communications and may bring younger users into the fold, and I'm talking about Facebook's proposed acquisition for the fast-growing messaging startup WhatsApp. This for $19 billion in cash and stock. And Volkswagen plans to buy out minority shareholders of Swedish truck division Scania for $9.21 billion. This is an attempt to jumpstart a stalled 8-year effort to forge Europe's biggest truck maker. And finally, in energy deals, top global oil trader Vitol is buying Royal Dutch Shell's Australia refinery and petrol stations for about $2.6 billion in its biggest acquisition. This as Vitol looks to grab a share of a growing oil product market. Back to you.
Last week, the corporate finance fraternity got together to celebrate their colleagues at the Cell-C Dealmaker Annual Gala Awards. In studio with me, I have the Dealmaker of the Year, Ernie Lai King. He's the tax executive and head of ENSafrica China. Also with us to look at the Deal of the Year, Michael Katz, chairman at ENS, and Doron Joffe, who's the director for the corporate commercial department at ENSafrica. Welcome. Really good to have all three of you here in studio. I'm going to ask you, start off with a general question, Michael. If you look at the deal-making environment in the South African, Southern African market, how would you describe it? We've got a great deal of regulation coming through, affecting the market. We still have a degree of recovery, sentiment recovery, economic recovery. And we also have, on the pricing side, we've got a fairly sort of healthily priced market, I should say, if you look at the listed environment.
Yes, I think that the regulatory environment in South Africa is by and large favourable to deal making. We've got a very strong, sophisticated financial infrastructure, good banking system, very good markets, the stock markets, liquid markets. So by and large, the regulatory environment is very favourable for South Africa. Secondly, Africa is the flavour of the month at the moment, and South Africa is still seen as the gateway to the rest of the continent. So from a deal-making point of view, I think South Africa is a favourable environment.
Well, Ernie, you've got the amazing title of the Dealmaker of the Year. So what earned you that? What is it you think that the adjudicators were looking for in this deal? What is it that we're rewarding?
Thank you, Erica. I must say I'm very humbled. As far as I'm concerned, I was just the guy who went up to get the award, because it was really a magnificent ENS team that put the whole deal together. The deal makers, the criterion, it's actually in the Dealmakers magazine, so I won't bore you with it, but it's not only deal value. It looks at the complexity of the deal, any controversy, future economic spin-offs. So it's done by a completely independent panel, and they look at the various criteria. The deal in itself was a very complicated deal.
And you're talking about the Shanghai Zendai deal that you're involved with? Yeah,
that's correct, yes.
And I'd love to go into more detail, but I just want to bring Doron in here. So ENS as a group also won the award for the Deal of the Year, and as expected, that's the Adcock Ingram deal. Probably not quite signed and sealed, is it? Or is it a fait accompli at this stage?
Well, I think the initial stage is a fait accompli. I mean, Bidvest is currently at 34.5. Yeah. CFR has gone away, so I think at the moment it's stable.
Yes. So Michael, if we look at the Adcock Ingram deal, and we all love a good story and wonderful drama, and this is a bit like a text from a soapie that we've seen playing out over the last year. So if we go back to the history, so was it nerve-wracking to be involved in this deal? So I suspect all three of you were to some extent involved. Was it nerve-wracking? Was it exciting? Was it nail-biting?
Well, it was tense. It was the highest profile M&A transaction in the country for a long time. The value of the target was about 12.5 billion. You had a foreigner investor, CFR from Chile, bidding for 100% of the company. But perhaps the starting point was that Bidvest was really the first bidder. Bidvest, and it started in March last year. So we've been at this for 11 months. Bidvest started it, requested the board to propose a scheme of arrangement. The board declined. The board then looked for alternative offerors, one of which was CFR. Finally, CFR, after a lot of skirmishing by everyone, CFR announced their bid, and then Bidvest, on whose behalf we acted, looked how we could retrieve it and get it back for Bidvest. And that was where we attacked that on the commercial side, the legal side, the regulatory side. And there was a lot of strategies, a lot of tactics, a lot of use of regulations. But from beginning to end, it was a very tense, stimulating, exciting deal.
But Doron, what Michael now described is what we all saw from the outside, and Michael said it started in March last year. Presumably it started long before that, though. What exactly was the strategy? What is it that piqued Mr. Joffe, Brian Joffe's interest? So, I mean, we all know Adcock Ingram's been an underperforming asset, presumably. That's what drew his attention.
I think it was exactly that. There was an underperforming company in a sector that seemed to be doing very well, other than for that company. So it seemed like a great opportunity. So I think that's what the opportunity to turn it around sparked his interest.
So why the offer for 60% at that stage? And at this stage, Bidvest has, as you said, a 34.5% stake. So is Bidvest at this stage comfortable with that stake, or will they be upping it gradually to the 60% level? So going back to my first question, why 60?
Well, the 60 would be, I don't think Bidvest decided they wanted to delist the company and have complete control. I think they were comfortable with having outsider shareholders. And I thought 60 would give them control. They could manage the company effectively to give them enough interest that it would be worthwhile for them to do so. And I think that's why they decided to go for 60.
Ernie, switching deals to the Chinese property deal, Shanghai Zendai, 1 billion rand for 1,600 hectares that was paid. So a significant deal, a Chinese player. So it was exciting at all sorts of levels. What were the difficulties that you encountered?
The difficulties, the deal in itself took 3 years, more than 3 years to mature. About 2 years of really planning discussions and discussions, and then 1 year of negotiations to seal the deal. And the spin-offs for the next 10 to 15 years for South Africa is estimated to be in the region of 80 billion rand. And of course there will be spin-offs for the local industry. The complications there really, because the sheer size of the property deal and the number of urban and the number of sites to be transferred, it's not going to happen overnight. And of course the issue was, well, when does the payment of the 1 billion rand cross the table? And eventually a compromise was reached that 50% of the risk would be carried by the seller and 50% would be carried by the buyer. So once approximately 50% of the market value of the land had been transferred, the full 1 billion would be paid in anticipation of the balance of the balance of the market value, 50% to be transferred. But of course all the regulatory issues, environmental issues, municipality issues, all that made it quite a tax issues. Of course, so the VAT was particularly complicated, added to the excitement of the deal.
Yes, and if I were to ask you, what were the lessons learnt, whether for yourself personally or for South Africa as a recipient of foreign direct investments and with people approaching business owners in South Africa?
The lesson certainly for me is get your planning right from the outset. Once, and as I say, it took 2 years in the planning. If we hadn't done that planning properly in the outset, I think we'd still be negotiating.
Yes, yes. Yeah. Michael, the Adcock Ingram deal, what were the difficulties there and what were the lessons learnt?
Well, I think that in any contested M&A deal, it's not a new lesson, it's just a given. It is a total commitment. You have to be onto it night and day. I was saying to Brian Joffe the other night, from the 10th of March last year, up to and including the Dealmaker award, other than 3 days, 3 religious holidays, there wasn't one day that I wasn't doing something on that deal. Reading newspapers, reading articles, ferreting out information. And it's just got to be in contested M&As. it's a total commitment, night and day.
What I'm also hearing, if you're firing that salvo right at the beginning, you must be able to follow through, because it's clear that the battle line's been drawn.
Absolutely. But also, these transactions develop their own momentum, and they can change direction. So you have to be knowledgeable on the regulatory environment, attentive to the facts, and totally dedicated, passionate, and also there's a big human element in contested takeover deals.
That's right.
Its impact on personalities.
And ego, right?
Yes, and ego. But at least it's everyone's ego.
Yes.
It's not just a single person.
Indeed, and probably plenty more stories to come. We're seeing the boardroom battle already on the go at Adcock Ingram. Well, it's been lovely talking to all of you. Congratulations on the recognition that you've received in the Dealmakers Awards.
Thanks to Eureka.
And that's it for this edition of Deal Flow. Thanks to my guests, Ernie Lai King, Doron Joffe and Michael Katz, all from ENS. Do tune in again next week to get the latest news and views on mergers and acquisitions. Until then, from me, Erica van der Marwitz, goodbye.